had to file my taxes for the first time ever this year as a business owner, and I had absolutely no idea what I was doing. We hear the word taxes and I cringe because it always feels like every time you're doing all right, here comes Uncle Sam ready to come and take a piece of your pie. Feels like the mob. And it's never at a convenient time. It's always more than you're hoping it would be. It's just, ugh. Now, I would consider myself pretty good with money. I saved enough to buy a house. I paid off my car. I drive a little beater car on purpose, and I haven't financed another one. I feel like I have myself somewhat together financially, whatever that really means. This being said, becoming a business owner this year taught me something, which is being good with money has absolutely nothing to do with knowing how to do your business taxes. Nobody told me this stuff, so I'm gonna tell you. These are the things I learned filing taxes as a first-year entrepreneur and business owner, and some of them genuinely surprised me. Let's get into it. Before we even get into the business owner stuff, let me tell y'all about the first time the government put me in my place. I think it's important context. When you're young in your financial journey and you first start filing your taxes, you're usually not making a lot of money. And honestly, filing your taxes for the first time is kind of a pleasant surprise because you file and usually you get money back. Yet you've heard the adults around you complaining about taxes your whole life. And then you file for the first time and you're like, wait, I'm getting a check? This isn't that bad. And then that feeling lasts us until we actually start making a decent amount of money. Because right when you've gotten yourself out of the mud, right when you're starting to feel financially secure for the first time, this is exactly where Uncle Sam comes in and reminds you of who's really in charge. This is what happened to me in big tech corporate. I was doing pretty good. I had RSUs, or restricted stock units, also known as golden handcuffs. More plainly, if you don't know what that is, it's basically company stock that vests over time. And it's usually one of the reasons that people stay at big companies. I paid off my car with that money. I also think when I first got my big first chunk of change, I bought like $1,000 worth of new shoes. Don't judge. But I also saved the rest to put a good down payment on my first home. And I didn't finance anything or use the money outside of that. Now, I thought I had what's called sell to cover set up. That means when your stocks vest, the system automatically sells some of those shares to cover taxes that your stocks might have accrued due to capital gains taxes. In other words, I thought the taxes part was handled. Now, I went to go cash out about 6 to 7% down payment on my home worth of stock units, which was a big lump sum of money. And I was thinking I was going to get all of those shares back, but after taxes, I did not. There was over $30,000 of shares missing. When you're expecting a lump sum of money and then taxes take out a lump sum right out of it, I promise you it'll hit different every time. And it's better to just get your mind right, get your thinking right before it happens, because it's gonna happen when it comes to certain sums of money. And then it got worse. That year I went to file my taxes and the IRS said that I still owed money. I truly didn't understand why or believed that I owed any money. And I spent the next 2 to 3 years dealing with that from the IRS. Hours on hold, trying to get a hold of the IRS, paperwork, disputes, a whole thing. The lesson? When there's a lot of money involved, there's gonna be a lot of taxes involved. That experience at least partially prepared me for what was coming as a business owner, partially. So here's the stuff that caught me off guard my first year as an entrepreneur filing business taxes. Number one is that you basically have to file 2 separate sets of taxes. So everyone knows about federal taxes. Mainly everybody in the United States has to file them every year. So that part I knew. What I didn't know is that in Washington State, and then depending on where you live, this may be called something different, you also have to file like your business taxes associated with your business license through the Department of Revenue. It's completely separate from your federal return. It's not the same thing at all. And the Department of Revenue, or the DOR, is going to ask you, do you want to file your taxes annually or quarterly? As me being a first-year business owner, also, the answer might look different on this question depending on how much revenue you brought in. I'm still figuring this out. I just want you to know it exists because I didn't. On top of that, and this one kind of got me, if you have a business license in a specific city, the city can and most likely will tax you to operate there. So let's say that you have a food truck and you want to operate your food truck in Seattle, Burien, and Tacoma, which are 3 separate cities in Washington state. You're going to need a separate license for each city, and each city will tax you to be there, to operate there. I had no idea of that. The second thing I learned more about is that your LLC, your business license, and also trademark are 3 separate things, but they're like all connected, and nobody explains it clearly. So your LLC is a legal structure that protects your personal assets. So if someone sues your business, an LLC can help protect your personal stuff, your house, your car, your savings, and you form it through the state. That's one thing. Your business license is separate. It's what gives you permission to actually operate your business. So those are 2 separate things. And then there's trademarking, which is like its own thing entirely. And you file that with the United States Patent and Trademark Office, or USPTO, which is all over their website. So what a trademark does is protect your brand name within a specific industry. So essentially what it means is that no one can operate under the name you trademarked within that space. So here's a real world example of why this structure matters. Let's say that I own Samantha Learns It All Pizza, and I make pizza. And so I trademark Samantha Learns It All. And let's say you want to be called Adam Learns It All, and you also want to sell pizza. I could then go to you and say, hey, I've trademarked this concept, and I've trademarked the name, and so you cannot sell pizza. You either need to stop selling pizza or change your name. And then if you didn't do those things, I could take legal action. It would be different if you wanted to be called Adam Learns It All and you do something else that I didn't trademark. So let's say that you talk about science or trash or any other thing besides making pizza. That would make it harder for me to come after you legally. And it's kind of pricey to pay for this, by the way. It protects you from making sure that somebody else doesn't steal your brand, essentially, and ride off into the sunset with it. There's many ways to do that, but it helps to do that. I would say what I'm learning my first year as an entrepreneur is that protecting your name and protecting your assets are 2 different conversations. And that as a business owner and entrepreneur, that we need to understand both. The third thing I've learned is about business bank accounts and commingling funds. We have all heard, never mix or commingle your business money and your personal money and expenses. However, when you're a first-year business owner who's funding everything out of their pocket personally, it gets confusing. I don't know about y'all, but it got confusing for me. Here's what I learned. As long as you have, and as long as I had a dedicated business bank account and wasn't using it to pay for personal things, I wasn't technically commingling, even though I was funding the business for my personal savings. That's essentially called an owner's contribution. What you want to avoid is chaos in the financial records. What I actually did, I kept an Excel sheet and used AI every week to go through my bank statements and categorize what was a business expense versus a personal expense. WordPress to run my website, business expense. YouTube Premium to create this channel, business expense. Groceries, not a business expense. Is it perfect? No. Am I still figuring it out? Yes. But the habit of tracking is what matters. Because your accountant or your CPA, once you get one, can only work with what you give them. This brings me to learning number 4, which is a CPA or an accountant. This year when I filed my taxes, I did the local H&R Block or TurboTax. I asked for an expert on purpose so I could ask this expert, hey, can you help me file my business taxes, like my Department of Revenue taxes? And what I got was a generic answer saying like, I'll help refer you to get somebody. So I just took that as a no. But what I did do this year as a first-year business owner is I became a member of my local Chamber of Commerce. I specifically went to business networking events, and I tried to understand more of what's happening in my community, how I can identify problems and be of value, and also who I should be connecting with in the community as a business owner. And that output a lot of CPAs that help small businesses. So what I'm in the process of doing now is finding one of those mini business cards I have and reaching out to somebody so that they can look at my tracking and the QuickBooks I have set up. The learning is that when you file your federal taxes, you're going to have to go about filing your Department of Revenue taxes separately, most likely with a different person, unless you've worked out a relationship with a CPA that is comfortable and you feel confident who can do both. And that brings me to our last learning, which is QuickBooks. And I just want to say, it is not as easy as the ads make it look. I tried to set up QuickBooks like 10 times this year, and I finally got it working. Also, I used Claude to connect it to my Claude, the desktop version, by the way. But I would just say, do figure out how to use it. I do think it'll help, and I think your first year as an entrepreneur is a good time to start experimenting with it, where you can get in the habit of building a system for yourself financially where you have your records. I like to watch this show called The Fixer with this investor named Marcus. I'm not gonna say his last name right, so I'm gonna say L, like Limonus or something like that. He always says, if you don't know your numbers, you don't know your business. And then he goes on to quick plug an ad for QuickBooks. But I do believe we need to know our numbers, but it's confusing the first year with everything you may have going on. So get your hands dirty in QuickBooks at a minimum. Here's the thing I wanna leave you with. This is a learning journey for me, as it is you. I'm still in it. And I'm gonna keep updating you as I go, because I think there's real value in watching someone figure it out in real time versus here's what I did after I had it all figured out. And I also find it's better to share my learnings now. I think they're more valuable versus when I figured it out, because sometimes then I forget all the cool things I learned that hopefully you can adopt if it's applicable to you. Here's what I know. If you fall behind on your taxes, I know that things can spiral fast. You hear about businesses and taxes all the time, and I have a lot of understanding and empathy for those businesses because I know what it's like firsthand to have an issue with the IRS and want to fix the issue, and then only to realize it's not a quick fix. When the IRS says that you owe money that you don't think you owe, you can't just call and get it resolved in a week. I wish. What really happens is you call, you're on hold for like 1 to 2 hours, literally that long. And then hopefully they don't hang up on you. That's happened to me. Or the person who answers can't actually help you. Then you're like, okay, I'm gonna try again a few weeks later. Same thing. You think about going into an office, but you have to work. You have life. And it's just genuinely hard to prioritize and jam in there with everything else that life is throwing at us. After 2 or 3 attempts at really trying to resolve this, it is very easy to just let it sit. And that's exactly how a small issue turns into a big issue. That's exactly how you end up going into the next tax year with unresolved stuff from the year before. And now you don't know what to do about either year. I've been there. Full disclosure, my taxes are good. I'm up to date and all of those things. But I had an issue once where the IRS said I owed money that I was certain I did not owe. And it turned out I was right. I didn't know it. But it took 3 years to sort it out. In the meantime, what was happening was they would just keep taking my tax returns, the money that I was owed for my tax returns, or kept piling on to say I owed more money on each tax return. So 3 or 4 years of tax returns gone to resolve something I didn't even owe. And I'm not sharing this to scare you. I'm sharing this because I don't think I'm special in this regard. And I think a lot of people go through this and feel like they did something wrong when really the system is just hard to navigate. So don't let that stop you from filing. Don't let it stop you from trying. Just start, even if it's messy. So those are some of the things that I've learned in my first year filing taxes as a business owner. If you want me to keep you updated on how this is going, the stuff I figure out, the stuff that still confuses me, let me know in the comments. And if you have ever had your own nightmare or something finally clicked for you that I should know about, please drop it below because I genuinely want to hear your stories, like no judgment here. Also, shout out to Washington State. I am actively looking for a CPA in Seattle who works with small businesses, and here's the key for me, and actually wants to build a genuine long-term relationship. I'm a relationship girly. So not necessarily just tax season, ongoing. If you know someone like that who I can trust or should be able to trust, please drop their name. I will link resources in the description. Subscribe if you want to watch me figure this out in real time and share with you the things that I wish someone told me. I'll see you in the next one.